Pablo, good to see you. How you doing? How you been? How's things, Pablo? Evening Miles of CMF. Are you looking forward to the weekend? I am looking forward to the weekend. Let's go, Joe. Good to see you as well, brother. How you doing? How you been? Good evening, brother Miles. Funky brother, good to see you as well. How you doing? How you been? Yes, sir. Let's go, Davey. Good to see you as well. How you doing? I can see that Restream still hasn't fixed the view account. I don't know what's going on there. Great time to buy. Let's go, Funky. Markets are bleeding. They definitely are bleeding. I mean, if you ever wanted an opportunity to buy anything cheaper, now's the perfect time, to be fairly honest. Hi, everyone. You're looking good, Miles. Thank you so much, Ripple. Good to see you as well. How you doing? Good evening, Miles and CMF. Bullock Soppy, good to see you as well. How you doing? What up, Miles and CMF? Christopher, good to see you as well. How you doing? Despite all the good news. Markets bleeding. Yeah. Good evening, Miles and CMF. Manny, good to see you as well. How you doing? How you been? Okay, let's do intro, disclaimer, and what we're going to talk about on tonight's live, and then we go back into the conversation and straight towards the first news. T, good to see you as well. How you doing? How you been? Welcome to the CMF Live if you're watching this for the first time ever. The CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, regulations. We also do Q&As in this live as well, which means if you have any questions, put it down in the comment section. More than happy to help you out. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And this is episode 364 of the CMF Live, which is incredible that we're on episode 364 right now. And I just want to make one thing clear. Restream still hasn't fixed the view account. It says 7 people are watching. There's a hell of a lot more than 7 people watching. I'm hoping by Monday, when we go back live again, the Restream view account is fixed. Now, I also want to say thank you so much to everybody from the CMF who has tuned in right now, who has already liked and retweeted this live on X, if you're watching this on X, and if you're watching this on YouTube, thank you so much to everyone who's also liked the live as well. If you haven't, CMF members, like and retweet these lives. Thank you so much to everyone who's done it. And thanks so much to everyone who's doing it right now. Now, mixture of news to go through on tonight's live. As always, we have some Fed news to go through on tonight's live. We have some international news that's relatable to cryptocurrencies. We have some Trump news to go through on tonight's live. Some ETF announcements to go through on tonight's live. And obviously, as always, we have the Ripple news to go through on tonight's live as well. Before we go for the first news, which is regarding the US stock market and the crypto market space, as usual, matching each other on the decline. Before we go through the first news on tonight's live, let's go through the comment section again and go straight into the first news. Let's see where we're at. Good evening, Miles. How are you, brother? I'm doing great. Callie, good to see you as well. Funky brother, I had to switch over to YouTube. No problem. Drop a like on YouTube as well. Just liked the live and retweeted. Thank you so much, Funky brother, for that, for liking and retweeting on X and going to YouTube to like the live as well. Amazing. What to buy? Say it. I can't recommend you anything to buy. I can always recommend you to research projects if you want to. You can research essentially XRP, XLM, XDC, HBAR, Cardano, Solana, AVAX, TON. These are all great projects to research into and see which one is the better fit for you. Now, none of these are financial advice whatsoever. Just like the live and retweet it. Thank you so much, Frankie brother. So here's the first news on tonight's live. And the stock market and the crypto market are following each other's footsteps, you could pretty much say. Well, one is following the other. US stock market and crypto indices experience a very synchronized decline. Major US stock indices, including essentially the Dow, S&P 500, and the Nasdaq, essentially, alongside key crypto-related stocks like MSTR, which is MicroStrategy, or Coin, which is Coinbase, fell on essentially today as liquidations have surged. This market down to essentially turn highlights volatility in both equities and cryptocurrencies, with significant liquidations and whale activities influencing Bitcoin and Ethereum movements. However, there are actually ETF inflows coming in. We have some new numbers to go through today's live as well. But the financial landscape, essentially on August 29th, witnessed significant shifts, primarily marked by a joint decline in both essentially stocks, indices, and cryptocurrency-related equities in the US open market. The cryptocurrency markets experienced heightened volatility, with liquidation figures exceeding $179 million so far in a brief time frame, highlighting the fragileness of the crypto market space. Investments under current market conditions, while whale activity was marked, notably large deposits and sales of Bitcoin and Ethereum by prominent holders. Despite these market fluctuations, there were no official comments from executives or regulatory bodies on the specific market activity, notably absent from statements from key figures such as essentially Michael Saylor, who typically comes out and boosts Bitcoin whenever it goes down, or Brian Armstrong or Jeremy Lai, making this market reaction largely speculative and community driven. Research indicates that these declines might prompt financial essentially recalibrations among institutions prioritizing Bitcoin for lending, with no essentially immediate regulatory address on trading platforms of volatility from essentially authorities. Possible technological advancements remain speculative, awaiting further market stabilization. Indicators suggest Bitcoin may peak soon, potentially leading to a market downturn if crucial support essentially is there, or if crucial support essentially fails. However, on essentially August 29th, Bitcoin and Ethereum ETFs also reported a combined net inflow of over $229 million, showcasing a continued appetite for digital assets from institutional investors. On one side of the market space is the whales that's dumping inside the market space, but the other side of the market space regarding ETFs, inflows are happening. $229 million combined Bitcoin Ethereum ETF inflows, showcasing a continued appetite from institutions. Essentially, the 10 Bitcoin ETFs saw a net addition of 1,578 Bitcoins, valued at approximately $174.35 million. At the same time, the 9 Ethereum ETFs recorded inflows of 12,489 Ethereum, worth about $54.86 million. The standout among these essentially was iShares by BlackRock, which essentially led the inflows across both categories. The fund also added 568 Bitcoins, which is roughly about $62.7 million, bringing its total holdings to an impressive 746,584 Bitcoins, currently valued at around $82.5 billion. On the Ethereum side, iShares brought in 15,127, which is roughly about $66.45 million, pushing its total ETH holdings to about 3.7 million plus Ethereum, worth around $16.59 billion essentially dollars. The latest inflows reinforces BlackRock's position as a dominant force inside the crypto ETF market space, with a combined holdings nearing $100 billion. In both essentially Bitcoin and Ethereum, iShares reflects a stronger investor trust in regulated crypto investments in vehicles. This trend essentially also signals a shift from speculative trading to long-term institutional participation, including such crypto assets. As these ETFs gain traction, they bring in not just capital, but also legitimacy to the broader essentially digital asset space. These steady inflows, even amid regulatory uncertainties and market volatility, show a deepening conviction in the essential future of Bitcoin and Ethereum in terms of ETFs. Institutional investment through ETFs offer greater price essentially stability and long-term support for crypto essentially markets. These inflows could provide upward momentum for both Bitcoin and Ethereum prices if the trend still essentially continue. Additionally, strong ETF performance could influence other financial institutions and regulators to embrace crypto products even more openly. So one side of the market space, essentially, they don't know why the stock market and essentially crypto markets have synchronized together once again, and that essentially went on the decline. Now, there are some things that are going on regarding Trump's new other tariff policies that are going around, essentially, that was announced today, which we're going to go later on tonight's live. But in general, essentially, the fintech essentially space inside the stock market is not doing too well. Bitcoin tends to sometimes follow the stock market, especially essentially tech stocks. Tech stocks are down, Bitcoin goes down, crypto market goes down with it. Unfortunately, as I say always, we still don't have the regulations we need inside the market space to be able to go to utility and essentially decouple from Bitcoin's footsteps when it comes to other altcoins. So unfortunately, every time Bitcoin drops, when it tends to follow the stock market, typically tech stocks, everybody else goes down with it. However, this is a great buying opportunity. I'll be fairly honest. If you ever wanted to essentially keep on stacking up on those XRPs or XLMs or XDCs or H4s or Cardanos or Solanos or whatever you may be in the market for, well, These are like sale prices, because you know what's going to be happening next. As I've always said, we know we're going to get the Clarity Act. We know that there's a possibility of a rate cut happening next month as well. The Clarity Act brings a lot of clarity, not just for the CFTC and SEC on what they have to do going forward, but also essentially for banks and institutions and governments going forward. Other countries will also look at the United States bringing that Clarity Act in and think, well, maybe they should introduce something similar, which then could also provide liquidity on an international basis. I mean, it's the same as the Genius Act. When the Genius Act got passed, Hong Kong started thinking about maybe they should do a stablecoin act, which they're going forward with. Japan thought maybe they should do a stablecoin act. South Korea thought maybe they should do a stablecoin act. You get the picture. Whenever America takes one step forward, everybody else was to follow their footsteps. We get a Clarity Act and we start moving forward towards utility. Other countries will definitely follow in suit. It's the biggest market space in the world. They tend to follow its footsteps. So if you are in the market for a discount, now's your time. Now, the Federal Reserve is what we'll talk about next, which is the Federal Reserve anticipating the September rate cuts that a lot of people are looking forward to. That's, Jerome Powell's last ever speech that he did at the Jackson Hole event, of him giving some indications that we could be going towards a rate cut, a possible rate cut. Now, there is also the chances of maybe not a rate cut, but there are members of the Fed, for example, Christopher Waller, that came out today and said that he's on the side of having rate cuts happening, because the market needs it now, pretty much. So here it is. The Federal Reserve is anticipated to cut the interest rates by 25 basis points in September due to persistent signs of economic slowdowns and weak labor market data. Such essentially rate cuts typically benefit BTC, ETH, and other essentially cryptocurrencies. The Federal Reserve is expected to lower the interest rates in September 2025 following the US economic slowdown signals. Jerome Powell's recent announcements and weaker labor data contributes to this anticipation. Also, Christopher Waller's speech today could also add into that matter as well. Rate cut expectations highlight economic weakness with potential shifts in investments and broad implications for market dynamics. In other words, traditional market fails, crypto market, which is seen as the alternative riskier assets, will go up in price. Traders anticipate the US Federal Reserve to cut interest rates by 25 basis points also at the September FOMC meeting due to economic indicators. Jerome Powell, the Fed chair, recently suggested this possibility as the means to manage employment and inflation situations. Experts like essentially Michael Furley of essentially JP Morgan highlight the labor market influences on the Fed's decision. Even JP Morgan is suggesting that maybe the Fed is going into a rate cut in September. Jerome Powell essentially hinted that there could be rate cuts in September as the agency considers a strategy to balance employment and inflation. Such adjustments significantly affect essentially risk appetites within financial markets. Rate reductions essentially traditionally encourage movement into riskier assets, benefiting cryptocurrencies, essentially like Bitcoin, Ethereum, XRP, and so on. Such shifts essentially historically increase speculative demand on DeFi platforms. Crypto investors often expect rate cuts to surge the value of their growth. They focus essentially assets, sobering economic projections, influence institutional and retail essentially strategies, driving attention towards yield asset aimed at a lower rate environment. Global investment decisions hinge on anticipated Fed actions, which may redefine essentially funding strategies and strategic leverages and asset class shifters, as well as patterns suggest dovish policies cementate capital inflows to major cryptocurrency assets. So Christopher Waller from the Fed is also suggested that a rate cut is on the way. From Jerome Powell's speech, as we saw in Jackson Hole, indications of a rate cut. JP Morgan also suggesting that we could be heading towards a rate cut in September. So, as I said previously as well before, the market, in other words, the house needs to win in between. The house just can't be like an ATM machine that keeps on paying out. The house has to win. So we're going to get manipulation happening still inside the market space and other things happening inside the market space as well. But every time the market goes down, you know for a fact what's about to be happening next. With the regulations and licensings and utility and crypto assets, you know what's going to be happening on a global basis. So nobody should ever be worried when the market is down. Just in case if you are worried, you should see it as a blessing. Because how many times have you thought to yourself, I wish I brought XRP cheaper. I wish I brought more XLM. I wish I brought more HBR, essentially HBAR. I wish I brought more Solana, or I wish I brought more AVAX, or Link, or Cardano, or whatever it may be. Well, opportunities like this, come and go. So if you're the type of person that keeps on saying to themselves, oh, I wish I brought more XRP when it's like 20 cents cheaper, 10 cents cheaper. Well, here's a chance. Don't let it walk away from you. Not saying that this is your only chance. There's going to be chances along the way as well. But every time it goes down, that's your chance. No financial advice in any sort of a way. Now, Google Cloud is what we're going to talk about next. But before we talk about Google Cloud, let's go inside the comment section first. Let's see what's going on there. As I said previously, this is live, which means, as always, if you have any questions or statements, put it down to the comment section. More than happy to help you out. So let's see what's going on inside the comment section. We were at here. Warning, stay away from Essex tonight, right wing or on the foot. Okay. Mouse, can you answer, would you 10x XRP because I'm being told I should buy. I said never, it's gambling. Would I 10x essentially leverage trading? In other words, leverage trading is risky. You could end up being liquidated. 10x is very, very small. It's a low possibility of getting liquidated, but you still can get liquidated. Not financial advice, is completely up to you if you want to go leverage trading. Understand, that there is a very high possibility of you getting liquidated, but with 10x, low possibility, but you can still get liquidated. So it has to be with money you're prepared to lose just in case. Hi, Miles. Artistic. Good to see you. How you doing? How you been? Too much manipulation? Yes. It's because the house has to win. Before we go into the high notes, Miles, what's going on behind the scenes with Crow? What's happening with Crow? Where Trump's media company essentially purchased a tremendous amount of Crow, which we talked about 2 nights ago. So it's the basis of, is Trump's family and Trump's administration now involved with Crow? They actually control a substantial amount of percentage of Crow, to be fairly honest. They could actually dictate its future going forward. So in that sense, as long as it's like the same way Elon Musk is behind Dogecoin, the same way. However, Elon Musk hasn't invested billions of dollars into Doge. We don't know if he has, he hasn't, but I don't believe he has. But Trump's family has taken a step further, not just supporting Crow, but also buying into a tremendous amount, to be fairly honest. So Trump's family is supporting essentially Crow's footsteps. Good evening, Miles, and all CMF. Adi, good to see you. How you're doing? Also, Crypto.com is doing a lot of great work as well. Not only inside the crypto sector, but also tokenization and going international on tokenization. They're doing quite a lot of great work, to be fairly honest. I always buy the good evening, Miles, and all CMF. Adi, good to see you. How you doing? I always buy the dips, Miles. Let's go Ripple. I'm happy to buy the dip. Let's go Artistic. Good day, Miles. Mike, good to see you, brother. How you doing? I have Crow, Miles. Let's go Ripple. Google Cloud is what we'll talk about next. So we've talked about Google Cloud in the past 2-3 days, where Google Cloud is introducing something to compete inside the blockchain sector when it comes to payments. Well, we have a little bit more of an update on that matter. Google Cloud pushes neutral blockchain to compete with Stripe and Circle. Google Cloud is preparing to enter the crowded blockchain infrastructure market, pitching its universal ledger, which we talked about before, as a base layer that any bank or fintech can use. In contrast, the rival projects launched by Stripe and Circle. The company first hinted at the project in March, essentially when it announced a pilot with CME Group to explore wholesale, essentially payments and asset tokenization. Rich Winman, Google's Cloud's essentially head of Web3 strategy, published new details on LinkedIn, calling GCUL the product of years of R&D and describing it as a layer 1 blockchain with Python-based smart contracts. Any financial institution can build with GCUL, Winman wrote. Tether won't use Circle's blockchain, and Aiden essentially probably won't use Stripe's blockchain, but any financial institution can build essentially with Google Cloud. The timing is pointed. Earlier this month, Circle essentially unveiled its ARC blockchain, which we also talked about Circle introducing ARC blockchain, designed for stablecoin payments, FX, and capital markets and applications, because Circle wants to compete with Ripple in terms of RLUSD or Ripple payments in general. Stripe is reported to be building Tempo, a highly essentially through-output chain geared towards enterprise payments. Each reflects an effort by tech companies and firms to extend their essential reach from payment services into the underlying financial plumbing. Circle already has a strong foothold in stablecoin markets through USDC, while Stripe processes transactions for millions of merchants worldwide daily. Google is betting that neutrality, offering rails not tied to any single issuer or PSB, could appeal to banks wary of building on essentially competitors' chain. Google's biggest public pilot so far is with CME Group, one of the world's largest derivatives exchanges. The two companies essentially signed a 10-year cloud deal in 2021 alongside essentially a $1 billion investment from Google into CME. Earlier this year, CME confirmed it had completed the first phase of integrating Google Cloud for payments and tokenization, with further work underway. Google Cloud is currently understood essentially to be running in a private testnet with more technical specifications expected later in 2025. Developers will be able to use Python to write smart contracts, a choice that could lower barriers for financial engineers who lack experience with Solidity or Rust. The rollout comes as lawmakers in Washington and Brussels are crafting new rules for stablecoins and digital money. And as global payments firms explore token-based settlements, if Google can position Google Cloud as a neutral ground for these institutions, it could replicate the role its cloud unit already plays in hosting infrastructure for exchanges and fintechs and banks. The coming months will reveal whether Google Cloud can move beyond pilots into live flows, and whether Google can essentially persuade a cautious financial sector to let the search giant run part of its payment rails. So, Google Cloud payment infrastructure is trying to play a neutral role. It's trying to compete with Stripe's, essentially blockchain infrastructure that they're going into, and Circle. Google wants to compete with Circle in terms of USDC. Let's see how that's going to be playing out in the long term. I don't think a few companies are going to be happy about that, essentially about that one. The companies especially behind Circle. Now, investors abandon class action lawsuit against Strategy Incorporated is what we're going to talk about next. So moving on from Google Cloud trying to play a neutral role in terms of payments, we're going to talk about MicroStrategy just for a second. So about a month ago, I revealed to everybody that MicroStrategy is essentially being sued, or Strategy is being sued by its own, essentially, investors. However, today, the lawsuit, well, here it is. Strategy investors have reportedly abandoned a class action lawsuit alleging misleading statements about Bitcoin treasury strategy, as indicated by legal filings as of August 29th, 2025. The people that were suing Strategy just abandoned the lawsuit. The lawsuit's withdrawal could impact market trust and Bitcoin-focused strategies, though no immediate changes in Bitcoin or MSTR value have been observed. Investors have reportedly abandoned a class action lawsuit against Strategy Incorporated, alleging misinformation about its Bitcoin treasury strategy. Information is available through legal filings, while leadership direct statements remain absent. The lawsuit names Strategy's leadership as defendants, with no specific names disclosed. No statements have emerged from official company channels, relying on court documentations instead. Investors have reportedly abandoned a class action lawsuit against Strategy Incorporated, alleging misinformation about its Bitcoin treasury strategy. Information is available through those paperworks. Now, the lawsuit names Strategy leadership, and as of now, no direct essential name executives or key essential opinion leaders concerning the recent decision to abandon the class action lawsuit against Strategy. All relative information is derived from the court filings. Nothing else. Nothing's coming out of it. Strategy isn't talking about it. The people that were suing Strategy aren't talking about it. It won't even make it to the news. It just suddenly went poof, just disappeared. All I'm going to say about that one is that's extremely odd. From a group of essentially people that were trying to sue it for a particular reason, and then suddenly, poof, it's a bit weird. Now, what we're going to talk about next is Trump, moving away essentially from MicroStrategy's disappearing case to Trump. Before we talk about Trump, let's go inside the comment section first. As I said previously, this is live. Like always, if you have a question or a comment, put it down inside the comment section. Let's see what's happening inside the comment section before we go through the next news, which is regarding Trump. What's your strategy on XRP, Miles? What's my strategy on XRP? Hold it for a lifetime and only borrow against it, only add to it. I will only ever add to my XRP. I will never sell my XRP. I will only borrow against my XRP, use it as collateral, obviously pay back the money I borrow. Otherwise, I'll lose my XRP because I'm using it as collateral. It's the only way that a legitimate way that I can essentially skip on taxes. Not saying it's a recommended way for anyone, because if you do borrow against your assets and you don't pay them back, then you could lose your assets. Also, if you borrow against your crypto assets and essentially they go down in value and they don't cover the collateral, you could also lose your assets if you don't put more on top. So there is a lot of essentially things you have to think about. It's not just as straightforward as borrowing against your assets. Things can go south in that sense as well. But for me, never selling my XRP, I know what its true potential is going forward. It's a lifetime project. It's not a short-term project. It's never been a short-term project. It's a lifetime project. So never selling my XRP, only adding to it and only borrowing against it. Some people will say, well, why don't you sell your assets? Why don't you sell your XRP for profit and buy back in? I don't need the money. Not saying I'm extremely wealthy and I'm so rich I don't need the money. No, I just don't want to do that. Any other asset I will sell in a heartbeat, but except XRP. By no means I'm like, in any sort of way extremely rich or something that I'm trying to brag at all. Nope. Any other asset I will sell in a heartbeat except XRP. Show your appreciation, like and repost, guys. Let's go, Joe. Thank you so much for that. As always, if you have liked and retweeted this live, thank you so much. If you haven't, CMF members, please like and please retweet this live. Morning, Miles and CMF. Shelly, good to see you as well. Morning, how you doing? How you been? Hi, Miles and CMF. Stormy, good to see you as well. How you doing? How you been? Oppression on your kindness, Miles. Giving use this information as an institutional investment. Let's go, Ripple. Thank you so much for the kind words. Let's go, Thompson. Now, Trump. Something for both XLM and XDC. Yes, same. I'm on the same page. XRP, XLM, XDC, they're definitely going to revolutionize the world. I'll be very honest. Hello again, everyone. Thompson, let's go. Now, Trump. Trump ends the de minimis exemption targets e-commerce trade. So is this going to have bad implications or good, essentially, things for the market space going forward? Well, President Donald Trump officially today terminated the de minimis exemption for low-value imports into the US on August 29, 2025, affecting shipments previously valued under $800 with new tariffs and fees. The policy targeting e-commerce businesses, in other words, could shift merchant preferences towards cryptocurrency payment solutions as cross-border sales face higher costs. So what Trump has done with this maneuver, it can actually benefit the crypto space going forward, where people will start moving to crypto for cross-border payments instead of using traditional, essentially, fiat currencies. The policy targeting e-commerce could shift merchant preferences towards cryptocurrencies. President Donald Trump has officially ended the de minimis exemption impacting low-value imports into the US. Previously, goods below $800 were exempt from tariffs. Now, e-commerce platforms and international sellers must comply with the new tariffs and fees, as outlined essentially in the CPB. Proposed rules strengthen enforcement and duty limitations. The actions involve essentially key figures including Donald Trump and Peter Navarro, senior counselor for trade. Trump aimed to bolster US businesses by reducing foreign competition. The removal affects platforms like Temu and Shein, which relied heavily on this exemption. Trump's suspension, essentially, of de minimis exemption enhances national security. This policy reshapes the market by imposing new costs on imported goods. E-commerce platforms face increased operational costs potentially passed to consumers. The shift pivots existing business models, demanding adaptation from previous exempt companies. Projections estimate $10 billion in annual tax revenue following the essential elimination of this law. Particularly, essentially, this move aligns with previous trade strategies aimed essentially at supporting US industries. Socially, it may affect consumer access to inexpensive goods from abroad. Peter Navarro stated the move would add up to $10 billion in tax revenues and help save thousands of American lives by restricting the flow of narcotics and other essentially dangerous and prohibited items. Industry experts suggest potential setbacks for cross-border trade efficiency. No immediate effects noted on cryptocurrencies as of yet, but it could also have a positive impact going forward because cryptocurrencies could be used for cross-border payments in terms of that. The policy does not target digital currencies, focusing instead on physical goods and e-commerce transactions, traditional transactions. While the direct crypto impact remains negligible, crypto payment processors might see increased interest because of this. Rising cost and fiat settlements encourages exploring alternatives. Historically, tariff changes affect logistics, but not on-chain activities, reinforcing crypto's indirect influence inside the market space. So Trump is about to be removing, or has essentially removed, the taxing exemption of anything under $800, where now essentially businesses that like Shein or Temu, any business mostly that imports from China is going to be affected by this essentially situation, which could prompt them to using cryptocurrencies to get around it, essentially as an alternative payment tool, you could say. It might be also seen as illegal if they do that in some cases. But this could have essentially positive impacts in terms of liquidity inside the crypto markets, to be fairly honest. So far, no negatives or positive impacts have been essentially weighed into the crypto market space whatsoever. It's just a theory on going forward. It's what's been suggested as essentially an outcome. Crypto could benefit from this new maneuver that Trump is doing by taxing anything essentially under $800 also. And this could also increase American citizens purchasing American products instead of relying on foreign products, which could also create more jobs in America in the long term, not overnight. Now, US inflation is what we're going to talk about next. But before we talk about US inflation, once again, let's consider this essentially into the live, into the chat. If you do have any essentially comments, put it down in the comment section. As always, as I said, this is live. Let's see what's going on inside the comment section. Then move straight into US inflation expectations. Furthermore, I do not use XRP, XLM, and XDC going up in value until there is currency revaluation. Maybe both Iraqi dinars and Vietnamese dongs become valuable to purchase more of the significant utility coins. I agree with your statement. Yeah, I agree. Share the live. Let's go, Scott. I agree, Thompson. Now, US inflation. US inflation expectations falls to essentially 4.8% in August 2025. In August, the one-year US inflation expectation was finalized at 4.85%, undershooting essentially the forecast of 5%, with potential implications for market sentiments and monetary policies. This lowering essentially than expected inflation figure may essentially ease presence on risk assets like cryptocurrencies, influencing Federal Reserve policies and potentially impacting digital asset prices. The value of one-year US inflation expectations for August 2025 was recorded at 4.8%, slipping below the 5% forecast and 4.9% of the previous period. As reported essentially by Blockbeats via essentially English Finance, the lower essential prints suggest potential easing of presence on both monetary policies and risk sentiments in financial markets. Notably, the Federal Reserve policy stance remains subject to economic essentially indicators. Financial markets, also particularly risk-prone assets, could see stabilization due to the reduced inflation essential expectations. Cryptocurrencies like Bitcoin and Ethereum and other cryptocurrencies historically sensitive to interest rate changes may benefit from this data if interpreted as reducing the likelihood of aggressive Federal Reserve measures. The drop in inflation expectations signifies a potential easing of monetary policies and discussions among central banks, said John Doe. The economist Federal Reserve Bank researcher noted that sustained inflation below predictions could stabilize the crypto market space, primarily if it signals reduced hawkishness from the Federal Reserve. Historical patterns also suggest such economic shifts could play a very vital role, a key role in determining capital flows into digital assets. So, what's essentially happening is the data that's come out regarding US inflation expectation falls to 4.8%, which they thought was going to be 5%, then they falls to 4.9%, but it turns out to be 4.8%. That could also be an indication that we could be heading towards that rate cut scenario. Everything's aiming to that rate cut possibly happening. With this report, with essentially JP Morgan suggesting that we could be going towards a rate cut, with also Christopher Waller from the Fed also suggesting a rate cut is on the way, and Jerome Powell's obviously Jackson Hole meeting, his last ever event. All these indicators aiming towards rate cut is en route. Now, Japan is what we're going to talk about next. So apparently, Japan has been quietly moving towards a stablecoin regulation. As I said previously, all of this is because America decided to pass the Genius Act, which prompted Hong Kong to go towards stablecoin regulations, which prompted South Korea to go towards regulations, Japan to go towards essentially stablecoin regulations, also Vietnam to go towards stablecoin regulations, Brazil to go towards stablecoin regulations, Russia even thinking about going towards stablecoin regulations. All these things, all these countries having this same thought pattern is only because Trump essentially helped pass the Genius Act for stablecoins. Whenever America takes one step, everybody else follows in suit. So here is what's been happening in Japan. It's been happening very quietly by the looks of it. Japan was the first country to establish a regulatory framework for stablecoins in the essentially Asian market space. Yet until now, it has taken a seemingly passive role in the technology, with no blockchain-based representation of its national currency, the yen. But that may soon change. After years of quiet infrastructure development, Japan is preparing to launch its first fully collateralized yen-backed stablecoin later this year. Takashi, Japan's country's manager at Web3 infrastructure provider Startail Group, told Cointelegraph that the gap between Japan and the United States on stablecoins reflects a deeper philosophy difference. The Genius Act was greeted with essentially a mix of relief and essentially curiosity, Takashi said, referring to the latest US stablecoin bill. Relief because the US has finally caught up with essentially what Japan has been doing 2 years apparently behind the scenes. This week's Crypto Essentially Biz explores Japan's stablecoin ambitions, the increasing role of institutions and digital assets, and mounting concerns over leverage in crypto treasuries. Monex Group, a Tokyo-based financial services company, is weighing in essentially on this matter, the launch of a stablecoin pegged to the Japanese yen. A move it says could enhance yen-dominated essentially international remittances and corporate settlements. Japan's stablecoin coming out later this year. Issuing stablecoin requires significant infrastructure and capital, but if we don't handle them, we'll be left behind, said Monex Group chairman Oki. And he told essentially this to their local media in Japan. While the company hasn't fully committed to an issuance, Mozza and essentially Monex will respond properly to the emerging market opportunities. Monex wouldn't be the first to explore a yen-backed stablecoin. Local fintech JPYC is also reportedly preparing to roll out the country's first yen stablecoin this fall, backed one-to-one by bank deposits and government bonds. Japan's Financial Services Agency plans to establish a cryptocurrency and innovation department in its fiscal year also in 2026. Not only Japan is getting ready to release their stablecoin with some stablecoin regulations later this year, but they're also essentially going towards creating a cryptocurrency and innovation department in Japan's Financial Services Agency in essentially 2026. Again, something that America has established, creating essentially the crypto Caesar or the crypto house under Trump's essentially administration, allocating 25 billion yen aiming to enhance regulatory oversight. The more countries that create stablecoins, the more liquidity that's going to be added towards the market space. The new department signifies Japan's commitment to advancing financial innovation, potentially impacting global cryptocurrency markets and fostering technological growth in blockchain, AI, and fintech sectors. The Japanese Financial Services Agency will create a new cryptocurrency and innovation department by 2026. An estimated 25 billion yen has been set aside for this restructuring, indicating a focus on integrating and regulating new technologies. The FSA's essentially recognition will transform the current Cryptocurrency and Innovation Advisory Office into a department within the newly proposed bureau. This shift highlights the country's commitment to incorporating technology into its financial regulatory framework. As stated essentially in the Financial Services Agency FSA official statement, this is what they said from Japan's essential financial services. The need to utilize new technologies such as fintech, cryptocurrency trading, and artificial intelligence to enhance the ability to respond to changes in financial services is a driving factor. Changes are predicted to impact the cryptocurrency industry, particularly affecting registered exchanges and assets. Enhanced oversight and potential regulations could improve also market stability and increase institutions' level interest in digital assets. Financial and regulatory implications are significant. The FSA budget embarked for this departure and emphasizes the government's essentially interest in fintech and cryptocurrencies. This could drive developments in AI and blockchain and digital currency market infrastructure. The 2026 initiative may lead to adjustments in Japan's cryptocurrency oversight policies. Historical trends show proactive steps in cryptocurrency legislation, suggesting improved regulatory clarity. The department may encourage innovation, impacting both existing and emerging crypto markets globally. So, Japan is getting ready to introduce their own stablecoin, their own yen-backed stablecoin that they've been working on 2 years very quietly behind the scenes. They're apparently, in their eyes, they're waiting for America to catch up. When America essentially released the Genius Act, that was Japan's indication of, okay, now we can move forward and essentially releasing our own stablecoin and regulations. Not only that, but also creating a crypto department or updating their existing crypto department in 2026 to bring in more innovation to the Japanese market space. Any country that keeps on creating a stablecoin of their own essentially adds it towards the market space. It adds instantly, not overnight, but over time, it will add liquidity towards the market space, depending on what the Japanese retail investors or institutional investors go towards inside the crypto space. it's going to be the top 10 to top 20 and so on in terms of cryptocurrencies, preferably for them. Not financial advice whatsoever, but you know it's going to be the top 10 or top 20 and so on. But yeah, I love the idea of seeing more countries getting involved, creating their own stable coins and adding it to the crypto market space. Incredible, honestly. Now, what we're going to talk about next, moving on from Japan, is Ethereum. Something quite interesting regarding Ethereum, which is not good. Before we talk about that, let's go to the comment section first. As I said previously, this is live, which means if you have any questions or comments, put it down in the comment section. I'm more than happy to help you out. So let's see what's happening inside the comment section first, and then we go straight into the next news of the next live. Let's see where we are at inside the comment section. Share the live. Let's go, Scott. Michael, good to see you as well. Good evening, Miles. How are you today? I'm doing great, Michael. Good to see you as well. Let's go, Scott. Thanks, no problem. Thompson, happy Friday. Happy Friday, Miles of CMF. Peg, good to see you as well. Peg, how you doing? Yo, hi, man. How you doing? Amanjaj. I'm sorry if I pronounced your name wrong. How you doing? Good evening, Miles and CMF. Hope everyone is well. SP, good to see you as well. How you doing? Miles, I haven't heard much being said about ACH. Anything you heard recently regarding ACH? No, nothing recently. It's just the old news regarding ACH. Let's go, Scott. Hit that like button, share the live. Let's go, Scott. Thank you so much for saying that. Now, something that everybody should know regarding Ethereum, and it's a perspective coming out from a very major established institution. They've decided to share their perspective on Ethereum in terms of, is Ethereum a great choice for institutions and banks going forward? Because some essentially would suggest it is. There are some institutions out there that see Ethereum as a viable choice for their financial sector of their company. And according to, well, this statement, Ethereum might not be the best choice. And one reason only. And it's not because the network gets congested, because it does sometimes. It's not because the fees are sometimes high, although recently the fees have been tremendously low, to be fairly honest, is what I'm hearing. And also, it's because of privacy. So here it is. Ethereum privacy issues demand solutions for institutional growth. The world of cryptocurrency, and by the way, this is not my opinion. This is opinion from a major institution, which I'll reveal who it is. The world of cryptocurrencies is rapidly evolving, with institutional players like banks increasingly looking to integrate into blockchain technology. But is Ethereum really the best choice? However, a significant hurdle remains for widespread adoption, particularly concerning Ethereum's privacy issues. So you see, Paul Brody, the insightful head of blockchain at the consulting giant institution Ernst & Young, recently highlighted this critical challenge, stating that Ethereum must address its privacy shortcomings to truly be embraced by the traditional financial sector. Otherwise, the traditional financial sector is not going to be releasing Ethereum as a viable asset going forward. Paul Brody remarks, essentially underscores a fundamental tension within public blockchains: transparency versus confidentiality. While the inherent openness of Ethereum allows for verifiable and mutable transactions, it also means that every single detail, who buys what from whom and for how much, is readily essentially traceable. Now, some may argue, well, that's the whole point of blockchain, because we want it to be transparent. We want blockchain to be transparent. Banks don't like the idea of their clients being transparent, where everybody in the world can see their transactions. Brody described this level of exposure as highly sensitive information, a significant concern for any entity operating within a regulated financial environment. Imagine a bank or a large corporation conducting business on a public ledger. Their competitors could potentially monitor their entire supply chain, investment strategies, or even essentially in terms of their trading activities in real time, which means that if financial institutions are going to be using Ethereum on their public chain, essentially, it could end very bad for them, because then their competitors can essentially know what their next movements on inside the market space, who they're about to go after, who they're sending money to, and so on. And it could have bad implications and cause ripple effects inside the institutional sector. As traditional financial institutions consider leveraging Ethereum for everything from asset tokenization to payment systems, the lack of a robust privacy feature becomes a deal breaker, according to this firm. Banks operate under strict regulatory frameworks that demand client confidentiality and protection of sensitive commercial data. Without the ability to selectively reveal or obscure transaction details, they simply cannot comply with these mandates. In other words, banks don't want to use Ethereum, according to this firm. Now, we know for a fact JP Morgan built their Onyx essentially platform on Ethereum, which is only used for institutions, and the retail section cannot have access to it. Brody's vision for the future is very clear. This is his own words. Everything will be brought, executed, and operated. Let's say, for example, on Ethereum. This bold prediction emphasizes Ethereum's potential as a global settlement layer. However, realizing this future hinges on solving the fundamental challenges of Ethereum's privacy issues. It's about creating a secure yet private environment where businesses can thrive without exposing their entire operational footprint. Now, who do we know inside the blockchain sector that can provide privacy to institutions and banks? Ripple. Ripple can provide the privacy that banks and institutions need. The conversation initiated by Paul Brody highlights a pivotal moment for Ethereum. It's a journey from decentralized application platforms to a potential global financial backbone depends heavily on its ability to adapt to institutional demands. Apparently, Ethereum isn't making it. It's not making the cut for institutions so far. Solving Ethereum's privacy issues is not merely a technical challenge. It's a strict imperative that will unlock immense value and accelerate the integration of blockchain into everyday finance. The ongoing development of privacy-enhancing technologies demonstrates the community's commitment to overcoming these hurdles. As these solutions mature, we can expect to see a significant shift paving the way for banks and other traditional entities to confidently essentially build and operate on Ethereum only if the privacy issues are ever essentially solved. In conclusion, Ernst & Young's Paul Brody has sounded a vital alarm against Ethereum. The future of institutional finance on Ethereum hinges on resolving its privacy dilemmas. By embracing advanced essential cryptographic solutions and dedicated layer 2 networks, Ethereum can evolve into a robust, confidential, and universally adapted platform, truly living up to its potential as a world essential competitor for finance and beyond. The opportunity is immense, but the challenges of privacy must be met head on. So, while Ethereum essentially is not being seen as a viable asset, according to this gigantic essentially firm, Ripple is. I'll be very honest. We know for a fact that Ripple can provide that privacy that institutions and banks need to be able to operate, something that Ethereum lacks. So why wait for Ethereum to catch up when you can just use Ripple or the XRP ledger? But it's interesting what's coming out of essentially this. I mean, they are a huge firm coming out with this perspective. Now, PetroChina is what we're going to talk about next. PetroChina explores stablecoin use for cross-border payments. This is massive news. PetroChina announced today at its semi-annual earnings conference that it is monitoring Hong Kong's stablecoin licensing policy and studying stablecoin use for cross-border settlements. PetroChina is getting essentially ready for stablecoin usage in terms of cross-border payments. This move signifies a significant interest in integrating digital currencies for international transactions, potentially influencing stablecoin markets and regulatory compliance in China and Hong Kong. The study aims to explore how stablecoins can be utilized for cross-border settlements and payments, addressing PetroChina's interest in digital finance mechanisms. The strict focus essentially aligns with efforts to potentially enhance transaction efficiency and reduce risk associated with foreign exchanges. Market responses point to a potential increase in demand for stablecoin-related infrastructure, particularly essentially those built on Ethereum. However, the company has yet to announce essentially any capital commitments or funding allocations towards this initiative, maintaining a cautious essentially approach aimed at ongoing evaluations. They said, we are closely essentially monitoring the Hong Kong Monetary Authority's newly implemented stablecoin licensing regime and have begun essentially a feasibility study to use stablecoins for cross-border settlements and payments. Chief Financial Officer PetroChina research team suggests that PetroChina essentially move could motivate regional adoption of digital currencies and cross-border transactions. Implementations extend to regulatory engagements, potentially influencing frameworks for digital currencies and fostering infrastructure developments that supports increasing transactional volumes. So, energy, China, cross-border payments, stablecoins, massive. Second biggest market space in the world, getting their energy market to enter into the cross-border payment section with stablecoins. The amount of liquidity that will add towards the market space is going to be tremendous. They haven't mentioned which stablecoin they're going to go towards, or is it just going to be their own stablecoin that they're going to be using inside the market space. Some are suggesting that it's going to be the ones that's on Ethereum's chain, which is USDT and USDC, but we don't know. China hasn't said anything on regarding if they're going to be using USDT, USDC, or USD, or they're going to create their own essentially yuan-based stablecoin that's going to be used for their PetroChina, which is what most likely is going to be happening, leaning towards that more on China's side. But this is, huge news, massive news coming out of China. Second biggest market space doing this. It does really show that the world is moving rapidly towards digital payments. If they're thinking about doing oil trades in cryptocurrencies, or stablecoins in this case. Now, also on the topic of China, China plans to challenge the dollar's dominance with their yuan-backed stablecoin. So here it is. This is essentially what came out by the retainers. According to retainers, Beijing is considering launching a yuan-backed stablecoin. Now, we haven't got essentially as any sort of major confirmations coming out of China. This is just the report that's came out by retainers. The first review will happen by the end of this month and led by the State Council. China has been very reluctant towards cryptocurrencies, but it seems to be changing its minds as a geopolitical, essentially monetary tool. It's seeking to enter this market, which is dominated by essentially Euro-USD pairs. The stakes are very clear. China's primary goal is to reduce the dominance of the dollar as usual. China failed to dominate the market space in the traditional sense when it came to fiat. So China is thinking to themselves, well, this is our second chance to dominate the market space in a digital sense, where the Chinese yuan becomes the #1 currency eventually to be used around the world. Is that going to happen? Probably not. But China is very hopeful on that matter. The stakes are very clear. China's primary goal is to reduce the dominance of the dollar in the stablecoin market, which amounts to nearly 98% of stablecoins are US dollars. In terms of volume, a yuan stablecoin will allow China to promote seamless international money transfers, provide a reliable substitute for stablecoins that are pegged to the dollar, speed up the adoption of essentially the global markets. I love this. I love the idea, as I said, more countries getting involved in stablecoins. It has more liquidity at the end of the day towards the market space. China's plan essentially concentrates on commencing operations in Hong Kong and Shanghai, which are considered major financial hubs. According to the Financial Times, Hong Kong must tread carefully and should issue only a small number of pilot licenses that are restricted to B2B transactions. Otherwise, the risk of capital flight and money laundering could increase. The announcement was met with enthusiasm by the market space. The Shanghai Stock Index hit a 10-year high, driven by fintech and broader blockchain optimism finally happening in China, where China is finally showing signs of, okay, now they're ready to enter into cryptocurrencies, at least through stablecoins. Similarly, XRP and USD performance reflected growing interest in cross-border digital assets aimed in use of a potential yuan-backed stablecoin. Isn't that one interesting? That as soon as China today announced essentially they're going to be, entering the stablecoin field, they're going to be using stablecoins for their PetroChina. They're going to be essentially bringing it out either through essentially both or either through Shanghai or Hong Kong. They want to dominate the market space. Somehow, based on that news, XRP and USD performance essentially went high. This monumentum confirms the strict importance that Chinese investors place on the project. They view it as largely uncharted path into global digital finance. This is not an insignificant reversal. For months, firms like JD.com and Ant Group have been essentially energetically advocating for the creation of a yuan stablecoin. It's true. And we've shared those news articles on this live before, where JD.com and other Chinese firms and Chinese banks are telling the Chinese government, it's time, we have to enter into the cryptocurrency space, what essentially global sense, or we're going to get left behind. The core of their argument is that without a yuan-backed stablecoin, China cannot free itself from an international digital financial system dominated by the dollar. So because the US is dominating the cryptocurrency space right now with a digital US dollars, even though it's not owned by them, the majority is USDT, which is Tether, which is El Salvador technically now. Also USDC Circle, which is American, RLUSD, which is American, and PYUSD, and you get the picture. But if China wants to compete and finally be able to compete on, who essentially controls the world in terms of currency, they have no choice but to enter the cryptocurrency space. The US is pushing China to enter back into the cryptocurrency race. If the second biggest market space in the world decides to create a stablecoin, comes out with a stablecoin, the amount of liquidity that will be entering towards the market space if China opens their floodgates is going to be ridiculously crazy. This constrains Beijing's geopolitical and economic ambitions inside the digital financial space. Despite this enthusiasm, many problems still persist. The yuan's limited convertibility is a major hurdle. Unlike the dollar, China's currency is still under strict capital controls, which might impede the worldwide adoption of the stablecoin, which is okay. Do you know why? Because at least Chinese, essentially retail section, or Chinese, essentially commercials or businesses, they would be using the retail, essentially token to enter into the market space. They will be using stablecoins. Everybody in China will end up using that stablecoin to enter the market space. So that could, essentially weigh in terms of liquidity entering the market space. So even if the world doesn't want to jump on, China still has a population of roughly about 2 billion people. So if they even enter the market space with their own stablecoin, it's perfectly fine. Global players will need to essentially be convinced of the asset's liquidity and stability for it to gain any traction outside of China also. Uncertainty, however, still exists regarding the kind of stablecoin that will emerge. Will it be a tool for strictly domestic use or a real alternative for such potential to compete with the dollar-dominated stablecoins inside the global market space? This demonstrates essentially that the project is about much more than just creating a new tool. Beijing is aiming to build an instrument of geopolitics with this technology. Should the yuan stablecoin become a reality, it might turn out to be a significant instrument for propelling the global essentially board of the market space. So in other words, especially in the ASEAN countries or African countries or Middle Eastern countries is where China could dominate the most compared to the Western nations. Nevertheless, China appears to be moving with caution. They're tiptoeing, they're putting their footsteps forward, one in front of the other, and entering back inside the crypto market space. Only because Trump's administration is so pro-crypto and pushing America further and further into the cryptocurrency, essentially cryptocurrency space, that it's making Chinese businesses, Chinese banks rethink themselves, rethink everything, and say, well, we need to enter back in, which is put pressure on the Chinese government, which is now where they're looking into, okay, we need a stable coin, we need to enter back into this race. It's an indication that China is about to be opening their doors. When? We don't know. We don't have an exact date of China's going to be opening their doors next week, guaranteed. But what we do know is China is getting ready. The second biggest global market space in the world is getting ready to enter back into the cryptocurrency space, starting with stablecoins, which is a big step. They will provide so much liquidity, not overnight, but over time towards the market space. It's going to be ridiculous. Now, as I said, not overnight, but over time. But it's true, it's huge news that China is about to be doing this. A country that banned everything related to cryptocurrencies about to be entering back into the market space because the US is making them feel left out, and also because China's thinking this is our chance to take over the US dollars by creating a yuan stablecoin and getting everybody to use it. Just themselves are 2 billion people, roughly 2 billion people. Now, before we go through the next news on tonight's live, let's go inside the comment section first. Next news on tonight's live is Ripple news, XRP news. So let's see what's happening inside the comment section first, and then we go straight into the next news on tonight's live. Let's see where we're at. Both Bitcoin and Ethereum is too exported. I agree as well. Those are my best advice. Let's go, Thompson. Hi, Miles. When is the bull run is taking a long time, and you think really 4,000 XRP is enough for being safe with anti-cracks? I've seen a lot of news with anti. Okay, Johnny, consider variable change. 4,000 XRP for someone to have is a great amount to have. If you want to add to it more eventually, why not? If you don't want to, it's your choice, it's your money, it's your life. It's a great amount to have. Some people will be lucky to have 4,000 XRP, believe me. I saw one person on X who doesn't have a lot of money, who can only afford to buy 2 to 3 to 4 XRP. Not 4,000 XRP or 400 XRP or 40 XRP. No, 4 XRP. So be lucky that you have 4,000 XRP. And over time, it will grow tremendously in value, in my own perspective. Not overnight, but over time. Not financial advice whatsoever. But be grateful for what you have, Johnny. Now, I can only hope that it is sufficient enough. It really is. Now, what reason why long hold off bull run? My patience is very thin. Johnny, because everything seems to fall into place. We still don't have the regulations we need. Clarity Act is coming next month. I'm convinced myself to buy the dip twice today. Yay, XRP. Let's go, Scott. We are getting closer to global adoption once these NDAs are revealed. Facts. Do you still feel the same about Algo? I've always said Algo is legitimate. I've never said it's a must-have project, but I said it's legitimate. It could have potential, but obviously XRP, XLM, XDC, HBAR definitely above it. Is what I would say. Will Algo truly have use case? Could do, yes. There is essentially a European bank that has decided to build an Algo foundation 2 years ago. No news so far from that bank, to be fairly honest. Hi, did anything read my comments? I had freezing screen. Yeah, I read your comment, Johnny. Long, seeing why Ripple. Miles, the air is filled with negativity concerning XRP. Do you think institutions are using fear-mongering to disrupt the retail sector? What's your view? Okay, it's a great question, SP. Right now on X, there is the usual suspects who hate crypto, who hate XRP. There are the new group of people that hate XRP. They just came out of the blue out of no reason, which is people who like Chainlink. People who like Chainlink suddenly started hating on XRP. So we also have Zach, who essentially is hating on XRP as well now, Zach XBT. So we have Chainlink people. Well, Bitcoin maxis always hated XRP because they know XRP is better in the long term. Chainlink essentially folks started hating on XRP. Now the Chainlink group, there's two groups. One are massive Chainlink supporters and don't see anything else except Chainlink. And then there's the other Chainlink group that hate on XRP because they're being paid by Chainlink to hate on XRP, believe it or not. And this was revealed by essentially a few crypto influencers as well, where they're actually being paid to hate on XRP on purpose. Because suddenly overnight they started hating on XRP and claiming that Chainlink is better than XRP, even though the numbers don't suggest it. Where is Chainlink on the charts and where is XRP on the charts? Is all I have to say to the Chainlink people. Now, don't get me wrong, Chainlink is a great project, has a huge potential ahead of itself in the future-wise. But the idea, as I said, always comparing Chainlink to XRP. Where is Chainlink in the charts? Where is XRP? To all those people who are saying like Chainlink is better than XRP. But yes, there is a tactic of fear-mongering right now going on, where it's just come out of nowhere. Suddenly, Chainlink influencers are being paid by Chainlink to hate on XRP. They overnight started liking Chainlink. And then also you have the Bitcoin maxis, which usually hated on essentially XRP anyways. You also have Zach XBT, who suddenly decided he hates on XRP. And then you also have some other groups. Look, I'll be very honest. It's just noise at the end of the day. It's just all noise. We know what its potential is. We know what XRP's potential is, and the XRP ledger in general, and RLUSD. We know that Ripple is trying to advance itself as further as it possibly can by getting that bank license, by getting a Fed account, by having all this international licensings, by being the only token XRP in itself, legally essentially approved inside the United States. There's no comparison when it comes to the financial sector. There is zero comparison when it comes to finance for any token. XRP, number one, full stop. But yes, there's definitely fear-mongering going on. What I would say is don't listen to the noise. We know what's going to happen next. There's regulations, the licenses are there. It's going to go to utility. We know who it's working with. It has tremendous amount of partnerships that are all on the NDAs, which were revealed essentially through the SEC case. So yes, there is definitely a fear-mongering situation going on there. Afternoon, Miles and CMF peeps. Semper, good to see you. How you doing? How you been? But yeah, CMF members, don't listen to any of the negativity inside the XRP haters space. As usual, there's always going to be haters there. Hi, Miles. Sorry I'm late. I'm going to listen to your recap at the end of the live show. No problem, call. But yeah, I mean, look, I said this and I'll say it again. Some people deserve to be poor in life. I'm sorry to say it, and I'm not trying to be cocky or rude, but, you know, some people just deserve to be poor in life. And the ones that get left out of XRP going into essentially a very CBDC restricted, regulated digital ID world, then if you spent your entire life hating on XRP for no apparent reason, or you were paid to hate on XRP, you're just pathetic. If you're paid by Chainlink to hate on XRP, you're pathetic at the end of the day. If you're somebody that thinks they're intelligent and hates on XRP, you deserve to be poor. Full stop. What country is this person from? Which one? I believe XRP can reach USD 10,000. Consider variable change. Why not? That is very strong possibility for that to happen. Miles, some saying rest cryptos will disappear and only XRP will survive one day currency. A few will be there, not just XRP. But yeah. Nice. Let's go Semper. Apples and oranges. I like both of those fruits. There is a lot of AI accounts also who are a part of the XRP communities, also asking questions, creating FUD. It's deliberate and coordinated, as they are all saying the same thing. Multiple accounts on X, that is. Facts. Thank you, Shelly, for that. Facts. Chainlink go hell, that's what Johnny said. Lots of accounts creating FUD and hating on XRP. I agree, facts. And it's all overnight. The Chainlink lovers came out of night. Follow the institutions, you won't go wrong. They want all of us retail out. We won't let that happen. Facts. Not financial advice. My thoughts convincing myself XRP, XNXTC, ACH, HBAR, and SEI. Also, SEI today, there's an ETF filing for SEI as well. Miles, these people are not just haters, but I believe they are hypocrites. I agree, 100%. Because they also hold XRP. The majority of the XRP haters hold XRP. And when you ask them, why are you holding XRP if you hate XRP? They say, oh, you know, because I'm going to be selling it down the line, is what they'll most likely say. Most of them say. But then you would have to ask them again, if you hate XRP, you see no future in XRP. Some of them don't even see XRP going above $5, but they're still holding XRP. Then why don't they just sell and go to a different crypto project if other crypto projects have higher potentials? The idea of holding something and then hating on it is just stupid. Honestly, it's just stupid and pathetic. Because I would somewhat understand if you didn't have the asset, for example, if you didn't have XRP whatsoever and you hated on it, and your own reasons, okay. But the idea of you holding XRP and then hating on XRP, saying it doesn't have a future, it's never going to go up in value, but why are you holding it? Is it because maybe you're wrong? That's why you're holding it? Because if it has no value, it has no potential, and in your eyes, if you think it won't go above $5, then why don't you just sell and buy something in your eyes that can go above essentially $5? So these people are not just hypocrites, They're twisted morons is what they are, to be fairly honest. The people that hold XRP and hate XRP and daily hate on XRP, on X especially, they're just twisted morons is what they are. Because as I said, if you don't hold the asset and you hate on it, okay, fair enough. Not saying you're right, but you don't hold it, at least you're not a hypocrite in that sense. But if you hold it, hate on it, and say it has no future, yet you hold it, you're just a twisted moron is what you are at the end of the day. Miles, these people are not, yeah, I agree 100%, Funny, but they are hypocrites. I agree, Shelly. I am not going anywhere. Let's go. Our drawn poll is up. Our Powerball is up to 1 billion. If I win, half going to XRP. Let's go, Semper. It's got my thoughts. I bet they are holding big bags of XRP. Some of them are. As files to one tongue, boys, are we to the gods? They their sports. Hello, Miles. 3 contracts were taken out in 3 days in preparation for mass casualties on 13th September in London. Do you think it's time for the purge? Lena, that one is a difficult question to answer regarding situations like that, because as you may know, we don't have freedom of speech inside of the UK anymore. Now, is SEI good buy or time waste? Well, it's getting an ETF. There was an ETF filing for SEI today. Yeah, I know one influencer that hates on it all the time, but still holds 100,000 tokens, where you're either in or you're out. Facts, what Shelly has just said. Miles, what amount is big bag of XRP in your financial opinion? Any amount is a good amount to go. Now, Amplify, on topic of ETFs. Lena, thank you so much for the £20 donation. Absolutely amazing. It's going straight towards that CMF. Thank you so much, Lena, for £20 donation. Absolutely amazing. Thank you. Now, XRP news. Amplify files for XRP income ETF. So we have another essentially ETF for XRP. The list is just getting bigger and bigger for XRP. Amplify managing $12 billion filed for an XRP option income ETF with the SEC, a major institutional move for XRP today. The proposed ETF could attract $5 billion in XRP inflows, boosting institutional interest and potentially increasing market stability. Amplify, essentially a prominent asset manager with $12 billion in assets, has filed with the SEC for a new ETF centered on XRP. This marks a crucial development in the institutional adoption of cryptocurrencies. The proposed ETF aims to generate option income, incorporating strategies akin to covered call options. This could attract both traditional investors and crypto enthusiasts seeking to diversify and regulated yield opportunities. Christian Mangoon, the CEO of Amplify ETFs, stated, "We continue to explore innovative financial products that align with market demands, particularly inside the cryptocurrency space." The ETF filings follows a court ruling in August clarifying XRP is not a security, enhancing institutional interest. NASDAQ rule filings and essentially regulatory updates provide a framework for understanding the impact of such rulings. This clarification paves the path for greater investment inflows and participation from major financial players. The market effect could be substantial, with projections of $5 billion in new inflows to XRP-related products post-approval. Such financial dynamics are poised to alter liquidity and volatility for XRP inside the market space. Regulatory decisions continue to shape XRP's trading landscape. The SEC's ongoing review reflects a broader industry trends and could set precedents for other digital asset ETFs. Amplify's entrepreneurial essentially spirit signals rising interest in crypto options. Error-free adherence to proposed ETF structures signifies the importance of regulatory clarity. Historical success with similar products for traditional assets offers optimistic forecasts for XRP ETFs' impact on market maturity and liquidity. So, just say this one more time. Chainlink lovers, or any other essentially XRP hater out there, here are some facts for the XRP haters. XRP has, here's one fact. I could do a list, but let me just give you one fact, because we're going to go straight to the next XRP news. If XRP because this is a very crucial topic and a very crucial question to be answered to all the XRP haters. If XRP is trash, has no value, institutions never going to use it. High-profile investors, not interested. Banks, not interested. Nobody's interested in XRP. So why has XRP got the highest ETF filings? Why has it got the highest ETF filings? Out of all of them. Out of Solana, Cardano, HBAR, AVAX. Why has it got the highest filings? It's a genuine question to all the XRP haters. Why has it got the highest filings? If XRP is trash, according to these crypto influencers out there, if XRP is such a trash token, if it has no value, and they can see it, but nobody else can, so why has XRP has the highest ETF filings? Maybe because you're wrong. If an asset has that many filings, it means their client base are interested in that asset. The only reason that all of these companies will go out of their way, we're using time, money, and resources to file in an S1 filing with the SEC for an XRP ETF, is because there's tremendous amount of essentially clients standing in line for that asset. That's the only reason those firms will go out of the way to file for a particular ETF. Now, why would their client bases, who are high-profile clients in some cases, be interested in an asset that has no value? So who's right in this equation? The high-profile investors with millions and billions to their names, or the crypto influencers with 10,000 in their pockets? It's a genuine question. Who's more intelligent? The crypto influencers with tens of hundreds of thousands in their pockets, or millions in their pockets, let's say in some cases, or the billion-dollar investors who are waiting in line to buy XRP ETFs? Who's more intelligent? Who can see the bigger picture? The crypto influencers or the billionaire investors? If it was such a trash token, there wouldn't be so many ETF filings. XRP wouldn't break records on futures. On that note, Japanese giant company makes a surprise Ripple XRP purchase. Japan-based mobile gaming company Gumi announced it will purchase 25 billion yen, which is approximately $70 million today, worth of XRP as a part of its growth strategy in the blockchain and Web3 space. The company's board of directors announced the decision today. The acquisitions are planned to take place between September 2025 and February 2026. Gumi argued essentially that XRP purchases wasn't intended solely to capitalize on the price appreciation, but rather as a step towards gaining strict position in international payments and liquidity networks. Just to mention that one more time, the reason why this Japanese gaming firm decided to go for XRP is not because of just the price, but it's also because they want to have a foot in the international payment and liquidity networks. If other tokens are better, why didn't this company go for a different particular asset? If they want to have a foothold inside the financial sector, why did they go for XRP? The company states that this move will increase revenue opportunities and blockchain-focused financial activities. The statement noted that SBI Holdings, Gumi's largest shareholder, has positioned XRP at the center of its global money transfer and liquidity network strategy, making it a high-streak fit. Gumi also announced it has essentially purchased 10 billion yen, which is approximately $6 billion worth essentially of other assets, in the first half of 2025, and invested these assets in staking protocols in Babylon. The company plans to pursue essentially a dual-prolonged digital asset strategy, focusing mostly essentially on Bitcoin and XRP. They could have went Bitcoin and Solana, Bitcoin and Chainlink, but they didn't. Drawing attention to the increasing usage areas of XRP, and they said the only reason they're going for XRP is because they want to have a foothold in the liquidity section of the world. especially in financial infrastructures such as international money transfers and liquidity provisions, makes XRP a strong investment tool in the medium and long term. The company announced that it will conduct a quarterly valuation of its cryptocurrencies and will disclose this to the public if there is a significant financial impact. As an interesting detail, it is known that Gummy and Ripple jointly invested in the biometrics authentication startup Keyless back in 2019 also. So, some crypto influencers hate on XRP, and also some of them hold XRP, ironically, and say it has no future, it's going nowhere, and everybody should sell. Yet XRP has the highest ETF filings, broke records on CME futures, highest, essentially, I mean, I could talk for hours regarding XRP, of its potential. But, you know, who's right at the end of the day? The crypto influencers or the billion-dollar investors waiting on the sidelines for XRP ETFs? Who's more intelligent at the end of the day? The hypocrites that hold XRP and criticize it every day on X, or the billion-dollar investors waiting on the sidelines, or million-dollar investors waiting on the sidelines for XRP ETFs? If it had no potential, if it had no future, if it had no usage, if it was just a fraud token for Ripple to dump on the folks, do you not think those billion-dollar or million-dollar high-profile investors would realize that? So maybe you're wrong and they're right. Well, I'll take it back. Not maybe, you're definitely wrong and they're definitely right. So, as I like to say, you can listen to the influencers or you can follow the money. On that note, we have reached the endings of tonight's live. I want to end it with my famous quote, which has always been, which is actually one of my father's quotes, which is, facts are facts. Everybody's entitled to an opinion, but facts are facts. On that note, we have reached the endings of tonight's live. This was episode 364 of the CMF Live. So CMF members, don't listen to the noise of all the haters out there, because if Chainlink was better, if Solana was better, if HBAR was better, if any of these assets were better, they would have had more ETF filings than XRP. That's your indication of follow the money. But they don't. Chainlink doesn't, Solana doesn't, neither of them do. Now, before obviously we go, let's start a conversation. But as I said, this was episode 364 of the CMF Live. The CMF stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news on cryptocurrency, CBDCs, AI, politics, regulations. Next episode, Monday to Friday, 10 p.m. London time. On Monday, it's going to be episode 365 of the CMF Live, which is incredible. Also, as always, the disclaimer of this live is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So before we do go, let's start a comment section first. Let's see what's going on in there. Obviously, XRP is going to be extremely expensive, where the average person will not be able to afford it. Facts. That was an invention, a moment for me to purchase those utility coins. Facts. Whoa, Lena. Honestly, Lena, once again, thank you so much for the £20 donation, Lena. Absolutely amazing. Thank you so much, Lena. Like Crypto Hulk said, those who later realize XRP's true potential when it is too late and priced out, there are going to be someone holding up a sign in the States willing to do and give you a shout. My name is Annabelle. Subscribe. Annabelle, how you doing? The unthinkable for XRP. Man, that is absolutely so saddening. I definitely do not want my clapped, aka upside down pineapple getting pinned. That was a moment for me to purchase those utility coins. Obviously, XRP is going to be extremely expensive when the average person is going to be not going to be able to afford it. Let's go, Thompson. Stormy, let's go. Crypto investors, they got the bacon, baby. Let's go. When XRP high pricing, Johnny, give us some time. Thank you, Miles. Good night, everyone. Let's go, Stormy. See you tomorrow. See you on Monday, same time as usual. Thanks, Miles. Have a great weekend. See you Monday, same time, place, Autistic. Let's go. See you on Monday, same time as usual. Night, Miles and CMF. Pablo, see you on Monday, same time as usual. Good night, Miles and CMF. Mike, see you on Monday, same time as usual. Miles, you see you on Monday night, and thank you for a great show. Let's go, Funky Brother. See you on Monday, same time as usual, brother. Facts, Miles. Let's go, Scott. See you on Monday as well, same time as usual. Miles, my saying. Let's go, funky brothers. See you on Monday, same time as usual. You always make it make sense, Miles. Thank you for your insights. Have a wonderful weekend, everyone. Let's go, Shelly. See you on Monday, same time as usual as well. Opinions are like everyone has one. Let's go, funky brother. Miles, thanks for another fantastic evening. I never regret listening to you. Let's go, Addy. Thank you so much for the kind words. Miles, you can't talk intelligently to a fool. Facts. Good night, Miles. Let's go, Callie. See you on Monday, same time as usual. Thank you so much. Have a lovely night, all. Lena, thank you so much for the £20 donation. Absolutely amazing, Lena. Thank you so much. And see you on Monday, Lena. I will see everybody. Thanks again for another brilliant live stream. Let's go, Thompson. See you on Monday as well. Same time as usual. Really appreciate it. Let's go, Thompson. I will see everybody on Monday. Same timing as usual. 10 p.m. London time. For episode 365 of the CMF Live. Like, follow, retweet, subscribe if you already haven't. If you have, thank you so much. I love you all. See you on Monday, same time as usual, 10 p.m. London time onwards. It's a pleasure. Thank you so much, Lena. And see you on Monday as well, same timing as usual. I'll see everybody on Monday, same time as usual. Everybody have a great day or a great night or a great weekend, wherever you are. See you on Monday, same time as usual, 10 p.m. London time. Love you all.